The 2008 financial disaster was predicted by Michael Burry before anybody else, and he despises the present market rise. He's frequently used Twitter to alert investors that the stock market meltdown is only just beginning. He's not only exhaling hot air, he genuinely thinks so. In reality, he sold every share of stock he had in the second quarter of 2022. You read correctly. In the second quarter of 2022, the big short icon Michael Burry liquidated all of his stock holdings. He did, however, purchase one stock throughout the quarter. However, that appears to be more of a large wager on the U.S. economy entering a severe recession than anything else. For investors hoping for a fresh bull market, this may be the loudest warning shot yet. One of the best bear market forecasters of all time remains unwaveringly pessimistic on this market. What does he think? What stock did he really purchase in the previous quarter? The most crucial question is, should investors follow him? Let's react to such questions. Michael Burry is selling everything. Michael Burry had a sizable stock portfolio at the beginning of the second quarter of 2022. He held many additional multi-million-dollar stakes, including about $19 million in Booking, $18 million in Alphabet, and $18 million in Meta. He completely unloaded all of the positions in Q2. No one was untouched. The action was stunning, to put it mildly. The actions were less shocking to Burry's cryptic tweet fans, though. Burry has been sounding the alarm for weeks that this stock market fall might become nasty. He once likened it to the financial catastrophe of 2008. He added that the market sell-off was still only partially complete. The Burry bear theory is simple, at least as much as we can put it together from his tweets. Michael Burry thinks that while inventory building will cause a short-term disinflation, ongoing labor and commodity shortages will cause higher than normal inflation in the long run. Additionally, he thinks that the unfavorable economic effects of this high inflation would be exacerbated by the U.S. government's weak policies. The outcome will be a severe recession in the U.S. economy. Burry argues that this severe recession will result in a sharp decline in corporate earnings, which has not yet been included into stock prices. Burry predicts a stock market crash as corporate earnings decline over the following 12 months. Basically, it sums up the Burry bear theory, or at least our understanding of it based on an analysis of his consistently cryptic tweets. In essence, Michael Burry doesn't think inflation will slow down. He believes equities are doomed as a result. Therefore, he sold everything. Contrary to popular belief, Burry's decision to sell everything wasn't even the strangest aspect of his fund's most recent 13F filing. Shabby change? Burry sold everything last quarter in addition to making a pretty questionable acquisition. He purchased more than 500,000 shares of the privately run jail company, the GOOG. GOOG, with a market worth of less than $1 billion, offers residential treatment, mental health, and private penal institutions, both domestically and abroad. Although Burry's purchase in GOOG surely raises questions, the following is why it merits part of the web hype. Burry is not placing a very large wager. With an alleged $6.60 average price for his 500,000 shares of GOOG, Burry reportedly has a $3.3 million investment in the company. Crazy, huh? Last quarter, the man sold all of his $200+ million worth of stock. Then he invested $3.3 million in a stock of a private jail. What's happening here? Experts believe Burry is betting everything on the idea that America is doomed. Although this may seem like a sizable stake to investors, institutional investors or hedge funds do not view it as such. For instance, Burry's portfolio had a first quarter 2022 worth of $165 million before he sold off all his past holdings. It follows that with a $3 million investment, Burry's not betting all on GOOG. It argues that if Burry's forecasted recession is unusually bad, jobless rates will increase. Typically, crime rates increase along with rising unemployment rates. Burry's wager on GOOG appears to be that crime would significantly increase over the course of the following year, as the American economy enters a deep recession. The wager could also include a political component. Donald Trump, a former U.S. president, advocated private prisons, and throughout his presidency, private prison spending soared. In fact, GEO stock increased by more than double in the first 2 months of Trump's administration. With his acquisition of GEO shares, it appears that Burry may be wagering on both escalating crime rates and an impending red wave in the year's midterm elections. An overview of the bigger market. Given the modest position, experts think Burry is less likely to be pounding the table for GOOG specifically, and more likely to be expressing his opinion on the market as a whole by selling off everything but GOOG. Burry is renowned for defying Wall Street consensus, so it's probable that he believes the market is overheated in the near term and chose to go to cash since optimistic sentiment has returned to the market as the main indexes have risen off of their lows. For instance, he just deleted a tweet he had just sent on the current NASDAQ rally and prior bear market rallies. This is not to imply that GEO Group has virtues, which perhaps also contributed in some small way to luring Burry's investment. Without getting into politics, the company's primary activity is the provision of private detention and penal facilities, which will always be unappealing to certain investors. A contrarian like Burry will find this mindset to be music to his ears, since going against the tide might present opportunities to buy inexpensive equities. GEO Group trades at only 7 times projected profits for the following year, which is much less than the industry average. Burry's choice of position can potentially constitute a directional wager. Republicans are expected to take over one or both chambers of Congress in the 2018 midterm elections, which might result in the reintroduction of stronger criminal justice policies, according to several experts. This point of view has some merit, and GEO Group may stand to gain from the situation. Keep in mind that Michael Burry is a human. A legend, Michael Burry, he is without a doubt brilliant and an expert in financial markets, and when stocks are down, you should constantly pay attention to him, as they have been in 2022. Nevertheless, he's still only a human. He lacks a crystal ball to forecast how the market will develop in the coming months or years. He makes predictions about the direction that equities will go using study, arithmetic, and reasoning just like the rest of us, and his predictions of a market meltdown weren't always accurate like they were in 2008. For instance, Burry predicted an impending stock market meltdown in 2017, but it never happened. Do investors need to follow Burry's example? In the end, there are a few reasons why experts don't believe investors should support Burry in this decision. As was already stated, Burry only has a minor share in the company, making it of little consequence overall. Second, a 5 or 10-year chart reveals that GEO Group shares have significantly underperformed the S&P 500 over the previous 10 years. Although the price of the stock may be rising temporarily, it has a poor track record of generating profits for shareholders. Many investors would be better off sticking to investing in businesses that have generated long-term value. Also, since 13F filings only provide a snapshot of the prior quarter, it's likely that Burry no longer holds this stock now that the third quarter has been going for more than 6 weeks. Shares have increased by roughly 16% since his acquisition, with a current price of around $7.70. Given his opinion that the market is inflated, it's probable that Burry has already cashed in on the opportunity and earned a sizable profit on the stock. According to experts, investors should do this in response to the surprising news that Burry sold everything last quarter. Accept it and then proceed. Burry claims that equities are doomed if inflation continues. Bullish as we are, we wholeheartedly concur with that theory. Stocks, bonds, cryptocurrencies, and every other type of financial asset are doomed if inflation continues. Adding to the boom. But most current data points to a considerable slowdown in inflation. Stock levels are increasing. Prices for commodities are falling. Energy prices are decreasing. The cost of homes is starting to decline. Growth in wages is sluggish. The fundamental causes of inflation are all moving in the correct direction. Stocks won't fall if these tendencies continue. Rather, they will skyrocket. Experts predict what will happen exactly. Investors don't sell everything as Burry does because of this. They have been purchasing the dip instead. And as a result, from mid-June to mid-August, their portfolios have generally increased by more than 50%. According to analysts, this rally has only just begun. Experts predict that markets will be 20% higher in a year, and our stocks will increase by more than 100%. Not a continuation of a significant fall, but the beginning of a significant market rally. Bottom line, recognize the dangers using Michael Burry's doomsday argument. Then invest in stocks that may potentially double your money in a year in order to benefit from a future stock market boom.